It's a show time. It's starting. Good
morning.
Woo! Happy Friday, guys. What's going on? I am Ed Penn with NYC Homes, coming at you guys here with Israel Martinez and Gigi Pierre.
Yes,
so we actually have a guest hosted. We have somebody who is going to be joining us today because aside from real estate being unwrapped, we are going to be taking a deep dive. I wanted to call it deep dive into mortgages or deep. What was it that we were talking about? Deep dive.
We're unwrapping mortgages.
I know we're
unwrapping it. We're
the original name.
Oh, we wanted the lowdown. That's what we were talking about. The lowdown. Yes.
Lowdown.
But it's okay. We kept it professional, you know.
So we're just going to unwrap mortgages now.
Right. That's it.
Awesome.
All right.
Happy Friday, guys. What's going on? We have our guest today. All right. He's joining us. Awesome dude. He speaks Spanish too, so that's my preference because a Spanish brother from another mother. Okay, let's go. So we got Rodolpho joining us in the house. Hey. What's going on, Rodolfo?
So Rodolpho,
how you guys doing?
Rodolfo is the actually branch manager at CrossCountry Mortgage in Long Island. Happens to be also one of our partners, and he's really knowledgeable about everything mortgage, about helping people get into our homes. And today we wanted to ask certain questions and maybe go a little bit deeper because we also as mortgage, as real estate professionals, we have other questions than the consumer, but they all interrelate and we can help each other understand a little bit better. You okay with that little intro, guys? You think that was good? Let me put in the comments and see what we have.
Hello. Hi, good morning, Melody.
Hi. All right. Let's bring in.
Well, Rodolfo, thank you for coming in. I mean, we certainly go through a lot of frequently asked questions that are over and over again. So I look forward to actually asking these questions with you and getting your insights. From the beginning to the end, and questions that normally are either asked or people are just afraid to ask some mortgage people. So, unfortunately, I don't have the slide in front of me right now, but you guys have one of the questions we can ask them right now?
Yes, let's go with it. Are we missing our first? Is this our first slide? Let me just make it bigger. Actually, you know what? Let's go back with our beautiful.
Let's give the introduction to that question.
The introduction was
this is what's happening often in the industry. Now, we already know Gigi is a listing agent. Buyers, she kind of just.
I get them automatically. Yeah.
Okay. Yeah. No worries. So usually she kind of points that over to Israel and myself. So this is what happens in the industry, Rodolfo. We get a lot of first-time home buyers, people who are looking to purchase homes in today's market. They don't know a lot of information. They feel that they do because they've done research and they say, you know what? My credit's good. I make good money. I have some money in the bank. So they'll reach out to us and they're going to say, hey, you know what? I saw this home, fell in love with it by the pictures. I want to go see it. Now, what's happening a lot of the times is we're telling these buyers is, look, the sellers will open up their homes and they want to make sure if they're going to open up their homes, they want to make sure the person that's coming in is a qualified buyer ready to purchase. Usually they say they don't have pre-approval. So the question right here is, why should these first-time home buyers or people who are looking to purchase a home, why should they be pre-approved before they start looking?
Aside from the fact that real estate listing agents want that pre-approval. That fact.
Yeah, I mean, I think it's multiple different reasons. Because I mean, at the end of the day, when we're going into a purchase like this, obviously is the most important purchase or most expensive purchase they ever have, are doing in their lives. One thing is actually psychological. And I tell a lot of people is the number one thing is, obviously we want to make sure that they qualify. But even if you take that out of the equation and think psychologically, hey, listen, Mr. or Mrs. Buyer, if I show you this property and you love it and you aren't qualified, and I mean, what do you think that will do for you psychologically? How about we make sure that you can actually get approved for it? Obviously the nuts and bolts of it is that a lot of people, there was a stat actually in the presentation I made the other day. 1 out of every 5 Americans actually has an error on their credit report that they don't know of.
Wow.
So people think, oh, well, I have good credit. I went to Credit Karma, and my income is good. We have to dig deep. It usually depending on how busy the mortgage banker is, I would say 24 hours. If you give them everything, all the documents, W-2s, pay stubs, assets, we should be able to run through a pre-approval. Because at the end of the day, especially due to COVID times, even though we're clearing up, at the end of the day, think about it. If you were that seller, would you want a random person that can't afford your house looking around your house that possibly, could get you sick?
No, I'm not letting that person in, man, because people are out there and they feel some type of way with what's going on. And if you're going to come in, they want to make sure that you're qualified. It's unfortunate. Right. Some of these buyers want to go look at these places and they want to jump in there and they feel that the smart move is, no, I need to see this place, because if I love this place, then I'll get
but you know what is good? I always give people analogies. Listen, can you go to a car dealer and drive the car, go to a test drive without giving them your license? No, you can't. It's the same thing. It's the same thing. So at the end of the day, and that's all you have to say to people, listen, and that's only a $30,000 car, $40,000 car. This is $500,000, $600,000, $800,000. No, it's a different game. It's like saying you want to go, you want to drive a Maybach, or not even Maybach, a Bugatti, and they're not going to give your credit check. Listen, you need to get your credit checked. You need to see what's what you can afford, and also it's not only just for the seller, it's really for your own mental state too, to know where you are, because we don't want to crush people's dreams.
Right. And then there is always a difference between the pre-qual and the pre-approval. You have, I know I've seen agents bringing their buyers and they have a pre-qual from a mortgage company. We will lend you quick and you won't see us again. And I'm usually worried, because I'm I don't know. There is no letterhead. The guy is signing his first name. I don't know about this one. Yeah. You wanna go like a professional like you. I know your pre-approval letters go through a whole different process, correct?
Yeah, obviously, you have to make sure that you're looking up who you're dealing with. Listen, there's hundreds of banks out there. Hopefully you reach out to a guy like me, but if you don't, just do your research. Look at, there's Zillow reviews, there's Google reviews, there's also NMLS. If any consumers are watching this, NMLS Consumer Access. Yeah. Anybody can Google that. You can literally put their license number in that website and you can see the person's experience. To me, that's important. So you know who you're dealing with.
So someone with a pre-qual letter with no what is it called? MNS number, that's going to be a red flag, correct?
A complete red flag. Complete red flag. I wouldn't even talk to the guy anymore.
Wow.
And on top of that, you have a lot of guys that are having henchmen deal with buyers, and this is what a lot of times, agents like yourself, you might get a pre-approval, and you're speaking to the quote unquote loan officer, but the name on the pre-approval says Tom Jones, says somebody else's name, because that individual isn't licensed.
Right.
So that's important to know as agents. Look at that as well, and then maybe call your partner. I'm very big that if you have a listing presentation, or if you're a listing agent, that you should have a preferred lender. Because at the end of the day, listen, you can't guarantee anybody's going to use your guy. But what you can do, if the seller agrees, is make sure that your offers are screened through one bank, just so I can give you that thumbs up. And then that, hey, listen, this person's good. If they want to use the guy, they do. If not, to use somebody else, it's fine too.
Yeah, no, you're right. You're right.
Rodolpho, a question that I run into with newer agents or some agents as well, and is there a difference between like the Rocket Mortgage, Internet Mortgage, and let's just say the banks when it comes to pre-approvals?
Yes, obviously, allegedly.
Allegedly.
I don't want Rocket to come after me, but yeah, listen, when you're dealing with some of these out-of-state banks, and I would say, and we all know, listen, we're New Yorkers, and any big metro area, you don't want to deal with unfortunately, a huge bank that's out of state that's a call center, because that's what these banks are. They're call centers. They're mostly based in Ohio. You will never see a local branch. You will never be able to see them face to face. And their money isn't, don't get me wrong, a lot of times they do move quick, as long as you are within their box of getting approved. But a lot of times they're quick because they don't want you to shop. Because once you shop, you realize, oh, they're charging me an extra 2 points. Oh, they charge
to get you to get the basically the loan application going. But once you get that, it's very difficult as a professional to talk to anyone unless you're shooting an email and you have to wait a couple of days before you get an answer.
Because you have to understand, most of these call centers, they're in America, so that means they're usually 9 to 5, 9 to 6 in a different state.
Yeah.
So why would you want to, to me, play Russian roulette with your commission? To me, me personally, again, doesn't have to be me. Call a local guy, do your NMLS research, make sure that they're licensed for an extended period of time. And, the out-of-state banks, I would leave it to a cookie cutter loan. If you say they're doing an FHA loan, a complicated loan, listen, gear them towards a different person that's local.
I would personally rather work with a lender that knows our specific market, that understand the different pockets of sub-markets and what's going on and who the consumer is in that particular area. To me, that's very, very important. Yeah.
So I'm glad you guys are touching on that, because now that ties into the next question. Right. So look, we're dealing with buyers, and we want to give this information to both agents who are looking to work with qualified buyers. But at the same time, if there's someone out there that's looking to purchase, what we want them to have is a clear understanding is what exactly is the mortgage company, or in this case, Rodolpho, what exactly are you looking for when you're going to qualify that buyer?
Yeah, so we there isn't always, it's a lot of times buyers have a misconception. They will say to you, oh, I have great credit. Well, credit is only one part of your application. It's credit, there's income, and then what you're talking about as far as, assets. So when it comes to income, you have to have a 2-year work history. That's a very big, very, very big. Don't get me wrong. A lot of people mistake that for a 2-year that you have to be at your job for 2 years. That's not necessarily true. You can't have a large gap of unemployment unless, don't get me wrong, now with COVID, there's different restrictions and some good things out there as long as your employer could say that they laid you off due to COVID. But yes, you're looking for those 2 years. You're looking for the assets to be seasoned in the bank for at least 2 months. And then, we have to calculate your debt to income ratio, and that goes into affordability.
Yeah. As far as assets, again, in our communities, a lot of people traditionally like to keep cash in their house. And then, I'm like, oh, here I have $35,000 in cash and I haven't put it in the bank. Does it have to be seasoned?
Yes. So that's one of the biggest things. And that's
hold on, I'm sorry, guys. And let's define seasoned.
Yes,
some
that's
people
what I
might
want.
not know what seasoned means.
Yeah.
And we don't mean throw salt and pepper on the cash that's sitting under the bed or in the frying pan that's in your cabinet. Okay.
Yeah.
So let's explain both of those.
Yes.
Yeah. So basically that, what seasoned means is it's essentially that the money is in the bank without any additional deposits for that period of time. So 60 days, meaning 2 months. So essentially,
if you have, let me try to see if you have 40, if you're going to have like under your mattress, you collected cash and you found out it's $40,000, you're going to have to put that $40,000 in the bank. But then next week you have an extra $5,000. You're not going to be able to add it up. That $5,000 is going to need 2 months to season as well, right?
Yes, or it needs to, listen, cash in this day and age is a complete no-no. We have BSA, it's Bank Security Act. So at the end of the day, if you can't prove where you got your money, the lending institutions are going to assume that it's something bad. Number one, the number one reason, not to say that somebody's out there being Pablo Escobar, but it's like, you could be possibly tax evading. So they don't want that stuff. And this is not CrossCountry. This is every bank in America.
Sure.
So,
Okay.
So ultimately, there is ways around it. Sometimes if you're doing a specialty loan, but even those loans, again, that's a more commercial and stuff like that. Traditional home buyers, what we're going after, yes, you need to have that money in the bank. And as long as you're not doing no nefarious things, listen, it's going to raise what people might think, oh, will it raise a red flag? That's always going to be a question in the bank.
Mm-hmm.
Yes, it will raise a question. But as long as it's legal money, you don't have to really worry about it that much, or if you want, make smaller deposits. But at the end of the day, you need to have that
How
in
small
there.
should those deposits be? Because when I've heard lenders say that, or I've heard people say, "Hey, I got cash, but my lender's telling me to put small deposits in every single day." What would
below
be
10 grand?
considered?
Yeah, I mean, it's below 10,000, but reality is that it's all comes down to the bank's policy, whatever bank they deposit their money in. But at the end of the day, from the mortgage perspective, we're going to ask you no matter what. It doesn't matter, because if we look at your bank statements the last 2 months, and if we see that you made one $30,000 deposit and you never make those type of deposits, we're going to say, where did that money come from? And if it's legitimate, don't get me wrong, that doesn't mean that if you get an insurance claim and you have a check that's $30,000, you can't deposit it. No, of course, any check, you could deposit stuff like that. So even if, for example, the easiest, what most people would do, is, if you have any, well, I can't say that. That's an off-camera thing.
He's now going live.
But yeah, so I mean, at the end of the day, listen, there's a lot of people, depending on where you come from, what group you are. I deal with a lot of susus.
Yeah.
A big part of my client base is from Haiti. So what happens is that they need to be educated. Hey, listen, if you get that savings plan money, listen, you have to, wait 2 months and then come to me.
Right.
Then we can get you pre-approved.
Right. And we're not saying that our customers are doing anything wrong or illegal, but yeah, that's part of a mentality of different groups, not only the Haitian community, but the Asian community and so on and so forth. They pretty much do the same thing, where sometimes everybody pools their resources, and I think it's great.
Yeah,
and also,
it's actually a beautiful thing. To be honest, I wish more groups did stuff like that.
Right.
It just typically, they stay strong with it. So it's something that I normally have to teach and say, listen, this is what you need to do. And, make sure your money's in there for a few months. And if you get any payout from this or from that, or a gift from family, listen, make sure that's a personal check, and understand that the bank is going to ask for their bank statement. So you can't play no game. Back in about probably 4 years ago, that was the way around stuff. People used to give money to the family. They used to write you a check. That's a no-no. So basically they're going to ask for their bank statement too. So just understand that there's no getting around it.
Yeah.
Cool. Do you want to move on to the next question?
Yeah. I was going to do that actually. So let's do that. No, I got it.
It's in charge. It's in charge. Yes. All right.
I zoomed in because I knew you were going to say something.
All right.
So look, so now that we're talking, and Rodolpho, man, again, we appreciate you jumping on with us, man, sharing your knowledge. There's a lot of people on our team that, maybe they didn't know the financial part, but I'm sure they're taking a lot of notes on this, man. So look, there's a lot of first-time home buyers out there that are looking to purchase. Clearly, we've already established that. There's a lot more now than ever, I feel. I don't know if Gigi, Israel, if you guys feel the same way. But I just feel like people are buying, and I feel like the people that already own the homes are buying more. So for the folks that are jumping into this, looking for a home, never purchased before, they hear first-time home buyers program. Now, we want to be clear. I don't know about everyone else's market. For all you guys that are tuning in, definitely check your local market. But for us, for example, in some of these areas, we have these hot pockets. It's like it's burning up. People are like, there's a house on the market today. There's lines around the blocks. Like some of these programs, again, maybe the listing agent, which we established last week, as we mentioned to Gigi, maybe to the listing agent, it doesn't seem so enticing. But let's kind of dive into that first-time home buyers program, explain it a little bit, because everybody just looks at 3.5% down, and that's all they say. That's all I know. I know it's a first-time home buyers program. But if you don't mind, just kind of jumping into that a little bit.
Yeah. I mean, I think a lot of people have a misconception, though, because, like, technically FHA is used by most first-time home buyers. It's technically not really a quote-unquote first-time home buyer program, because it could be your third, fourth, fifth, sixth house. But typically most people do an FHA loan, when they're doing a first-time home buyer program, or being a first-time home buyer. There is many different other grant programs and things that will help you. Long Island Housing Partnership, NACA, NHS. Like there's a whole bunch that even Sony May is a great program through the state of New York. I'm not an expert on it. There's other lenders that do focus on that. But there's all income requirements and stuff like that. So the typical one that most people use is really FHA, because there's no income requirement. And I think there's a misnomer that people think that it's an inferior product when it isn't. I actually think in a lot of cases because I always look at stuff statistically, not just like, oh, this is my feeling because I'm an agent. I did, a few deals last year and I did 2 FHA loans. It took a little bit longer. I always tell people, listen, you have to get out of your own head, because the sample size that you have is extremely small compared to the grand scheme of things. I think something like 60% of first-time home buyers use this program across the nation. So we know that it's closable. It's going to close fairly quick. You're not going to have any issues. But the main thing is understanding that, listen, you have 3.5% down. It's very liberal when it comes to credit score. So it gives you that flexibility. It's liberal when it comes to bankruptcy length, foreclosure length. So when I say bankruptcy, like you can get something done within 2 to 3 years, where conventional is 4 years. Same thing with a foreclosure. So again, sometimes these people are, they bought a house, they foreclosed on a house 3 or 4 years ago, and for whatever reason, now they're back on the market. They got all that, PPE money. And now they want us to buy. So, I mean, listen, and that's one of the reasons why there's a lot of people out there too. Like, people are making, there's a lot of people that made like 30% more being on unemployment than actually working, last year. So, listen, it's a great product. I wouldn't say be discouraged. Listen, all the money's still green. The only thing that's different is that, again, you might get a few extra appraisal conditions. But if you look through your listing and you make sure that those things are addressed with your homeowner, it really wouldn't slow down your listing. To me, I always tell people, listen, if you have 60% of a plate, of a food plate, and you're starving, would you want to eliminate 60% of the food? No, you want the whole entire plate. And you know what? Take the best piece of meat.
Sometimes I want seconds.
You see my I'm not saying I'll say no to FHA mortgages because I had the offer accepted, but the mistake that a lot of buyers agents are doing, and my humble opinion as a listing agent, is they just throw in the offer with the binder, the pre-approval and proof of fund, and nothing else. If we knew a little bit of the backstory of that buyer, if for instance, if like the person is a first-time home buyer, but the husband is an attorney, the wife is a nurse, like they fairly new, maybe he's a junior attorney in the firm, but you seeing that there is a great income potential. Once you understand, like I wish I had more buyers agents that would give you a little bit of a backstory on their buyer, and then it's easier to convey to your seller. Granted, of course, it's not like a crazy, they don't shoot you like $100,000 above asking with a 3.5%, and they don't have that much cash to deal with it if it doesn't appraise, and we'll deal with that a little bit later. But I wish buyers agents make the effort to talk about where your buyer is coming from,
I think it's the art of making an offer, and that's sometimes some people need to go through some training.
Yeah, we do.
I would say, especially in this market, you can't just do what you said. Send a binder, send a pre-approval. Me personally, I think you need to write a letter. I think you need to have the first page of the credit report in there.
Yes.
I think you need to, personally, that's why I was saying, you actually mentioned, I kind of didn't really say it, is go to a bank that's going to give you a commitment, like a pre-commitment. So right now, if you know you're behind the 8 ball and you have 35 offers or 15 offers on a house and you're FHA, stop going to a regular lender that's going to give you a regular pre-approval. Again, there's a few out there that will send your loan to underwriting. So now I'm sending a binder with a loan with a approval that says underwritten approval, committed. On top of that, give them the first page of the credit report. On top of that, maybe include a DU. Now you're giving almost a full.
We'll talk about this later on.
Yeah.
Because I know we have to.
We have the other
this
questions.
A little bit.
In there.
So I'm just saying, it's all depending on how you make that offer.
Right.
Give more information, not less.
Yeah.
So Wei asked a question. She wanted to know. Well, actually, she's working with a buyer who's worried about putting too much money in the bank for a long period of time. She wants to know if they will have to pay taxes on that or not. I think that's something that she would have to discuss with
an accountant,
like an accountant.
Yeah.
But usually, like we said it before, right?
I would not put anything forward in that manner. I think this is out of the scope of our licenses. And if they're worried, they just need to speak to the accountant and see what category they fall into.
It also depends on what type of loan that they're doing.
Yeah.
But a lot of times, like I do stated income loans. So, a lot of times some of those banks don't care as much. But when you're asking, like, that's not really a full-on lending question. That's more of a bank question that they're depositing the money in. And obviously an IRS question.
Yes, and that's why we're not.
I agree.
I'm not answering this one. I'm so sorry.
Yeah, it's okay. I mean, look, we addressed it, but at the end of the day, you would have to have the buyer speak to an accountant and speak to a bank.
Yeah,
this is something that we really can't touch on. But thanks for your question.
Yeah, keep it.
I might be able to help you off the record.
Off the record. Hold on, let me end the broadcast and then we say that and then we go live again. But look, so that's gonna tie into the next question. So look, this has happened. I'm not saying every lender is the same. It's just the same as there's good doctors out there, there's bad doctors, there's good attorneys, there's bad attorneys. In some cases, and I had some experience with this where I was dealing with a lender who was promoting FHA loans. Okay, I'm not on the lending end. I'm not on the lending part. But he was promoting FHA loans, even though the buyer was in a position to actually take out a conventional loan. So the question really comes down to why are FHA loans better than conventional loans for some of these buyers that we're working with today, even though they might have the down payment? Let's say they might already have $20,000. I mean, 20% down payment
20%,
to put towards to put towards their purchase.
Yeah.
Why would FHA loan still be better than a conventional loan?
Yeah. So like it's every profile is different, So I would say, if an FHA loan for a particular client is better than a conventional loan, it's all based on their profile. For example, if you have somebody that has, I wouldn't say 20. Listen, if somebody has 20% down, not 90%, they're going to go conventional. The only reason why they would go FHA with 20% is if their income is very low. So their debt to income ratio is not up to par with conventional.
Or the credit could be an issue as well.
Or the credit too, but normally if you have, I work in statistics. Mm-hmm. Usually when somebody has 20% to put down, they usually don't have horrible credit. But if they do, then yes, that could be it too as well. But right. I'm more so saying, like, when you have the say, for example, a lot of people know that you could do 3%, 5%, 10% down conventional loans. And that's where most people are really kind of wary. Like, okay, this person has 10% down, has, a 660 credit score. Hey, they can go conventional And they're technically right, depending on the debt to income ratio. But what a lot of people don't know is that the main factor when putting less than 20% down is mortgage insurance. And mortgage insurance is based off of your credit score and your down payment.
Yeah.
So, and a lot of times, again, people don't realize that conventional is extremely credit driven, and FHA obviously is credit driven, but not as heavily. So if you have sub 680 credit scores and putting 10% down or less, 90% of the time, an FHA loan is actually more affordable.
Can I ask a sticky question? And this is really like, and I know you're going to be really bluntly honest.
Very interesting.
Could it be, I have sometimes the feeling, and I don't want to get pretty much involved in, because I had a recent loan where there was 23% down, maybe even more, 27% down, sorry. And the buyer had very good income. I don't know what his credit was, but the loan officer did a 27% down and a seller's concession for closing costs. And it was an FHA loan. And I was like, I didn't want to say it, but could it be some unscrupulous mortgage?
It can be.
Basically those, basically loan officer that would just want to make more money and just qualify those buyers into programs they probably, that would be more costly to them.
Yeah. And this is what kind of circles back to what I said before. Looking up your loan officer. Because listen, can that happen? Yes, it 100% could happen. I would say most loan officers make maybe a few more dollars depending on their comp structure than government loans. That's not necessarily 100% true when it comes to your comp structure. It depends on how you make your comp structure. Whether you classify it as an in-house lead or as a self-generated. But ultimately, yes, there's some people like that. But again, sometimes as an agent, I know you were, like I said, you were the listing agent, but a buyer's agent, you should ask them why. And this is why I believe that all agents, you should know the basics about mortgages. Right. Or you should have somebody similar to like myself that can teach you one-on-one. Because, for example, I have done a deal that somebody put 25% down and we went FHA. Because remember what I said before about the foreclosure and the bankruptcy stuff. The guy had a foreclosure less than 4 years. So FHA has to be 3 years. So he wanted to buy a house. He had 25% down. He had to go FHA. There was no thing. It's all right. It's either that or wait a year.
All right. One more question before we move on to like a sub question to that question. How can you get out of an FHA loan? Because it looks like you're going to have to pay that private mortgage insurance for the life of the loan.
I mean, it's basically, long story short, you have to refund it. But another stat, if you Google it, and a lot of people, that's their biggest con for FHA loans. The national average for people holding mortgages like in between 5 to 7 years in America. So what that means is that whether you go conventional or FHA, unfortunately, Americans, we do stuff, but it doesn't necessarily mean that it's bad, because you could refinance. You could refinance in 3 years to, number one, to get a lower term. Say your income went from 50 to 80,000. And you want to, I want to refinance. The rates are great. I want to go from I have 27 years on my mortgage. I want to go to a 20. I want to go to a 15 year. People refinance for that too, So, or you racked up some debt and you want to do a cash out refinance. You're in a great market like New York, that you're in an area that appreciated 5% over the last 5% a year or 7% a year the last 3 years. Boom, you have your 20% equity. Yeah. So you would refinance whether you had a conventional or an FHA, because you would want to get out of the mortgage insurance. Mortgage insurance with conventional comes off usually within 7 years, or you have to call your servicer to do an appraisal, and then it can come off quicker if you're appreciated.
Okay. All right. And I guess a good loan officer would stay in touch with their past clients and make sure they are aware of their different, what do you call that? The different options, correct?
Yeah. One of the main things I tell all my buyers when I do an FHA loan is that, listen, this is what you guys can afford now. If you continue to make your payment, if you make extra money, your tax refund that you got a year, take one payment that's equivalent to your mortgage, make that. I'm going to call you in 2 years, and we're going to possibly look into refinancing your mortgage to save you $300 to $400 a month to get rid of the mortgage.
Wow.
And possibly do some retirement planning, because a lot of people don't do that.
Oh, wow.
We'll get into some next time, because a lot of people don't look at their mortgage and think about retirement. A lot of people get a mortgage and realize, hey, listen, this is the number one thing you have. You should be done paying it at the time you retire.
I guess that's going to be another subject of one of our training, because this is something fairly new to me for a loan officer to discuss retirement planning with their buyers. It's pretty amazing.
100%.
Yeah. Wow. All right.
That's just out of curiosity. Would reverse mortgages fall into that?
I mean, yes, if you didn't retire well. That's about it. I mean, if you didn't retire well and you have a lot of equity, you don't have a big pension. And listen, face it, that's a lot of Americans. You know, if you have $800,000 of equity and you have a $2,000 pension and you still want to live in New York, you should think about doing a reverse mortgage.
Okay, I guess we'll discuss that at a later broadcast. You want to move on to the next slide, boss?
Definitely. Yeah. Israel's the boss. He's the one watching us right now. So we were having this conversation the other day, and you did mention that we know, and we tend to mention to a lot of the buyers, hey, look, the banks are getting stricter. They got stricter guidelines. You know, your purchase power might not have been the same that it was 2 months ago, 3 months ago, a year ago. So now with all the changes that are taking place, I mean, there has to be new guidelines. They're probably cracking down on us a little more. They want to check more information, make sure that the money that's in your bank account wasn't laying under your mattress. So like, what are they?
What are the new changes we should look out for?
Well, they're new strict guidelines.
Yeah. I wouldn't say, like, listen, there's nothing that's dramatic that's new.
Yeah.
You know, I would say one big thing for, especially if we have mostly agents listening, is
and French
Fannie Mae has updated. It's a recent update. I forgot exactly what it's called, but they updated the DU system. And what they did is that they kind of changed their algorithm. And now it's,
love that word.
When a deal, like, a lot of people don't realize when you get, and I know we'll talk about this a little bit, but like, ultimately DU is a desktop underwriter. And you have to get that in order to get approved for a conventional loan. They changed it to where when deals are tighter, they're going to get a denial. So a lot of people don't realize right now, a lot of people that if you're out there with a buyer that is putting 3% down, 5% down, even 10% down conventional, please call the lender, especially if it's 3 to 4 months old. Call the lender and ask them to rerun the deal, because I would say 50% of the cases, it's no longer approved. They might have to go FHA.
Oh, wow.
And I've seen it myself, because I didn't know it until I ran into the issue, and then I started reaching out to people in my sphere, loan officers. They're like, yeah, holy crap. Hey, listen, I had this guy, it was approved eligible. Now it's asking for 4 months more assets. The guy doesn't have it.
Wow.
You know, so like, you know, so that changed. The one other thing is that they are being very big with I mean, which is not really that much of a change, but it's kind of more intensified with all these banks, is that with your employment history, and with obviously making sure, like, they're constantly calling your employers to make sure that you're still working because of COVID. You know, so be prepared that you give your lender a good contact, because that's the thing that could slow down your process the most. A lot of people just like, oh yeah, this is my boss's number. Your boss doesn't fill out a verification of employment 90% of the time. It's usually HR. And if you give me a 1-800 number HR, that a employee for my company or whatever has to wait on hold. Yes, they wait, but listen, do your research, get a direct phone number for somebody. They'll make your process quicker.
Wow. Okay. All right. You want to jump to the next?
Very interesting.
So this is actually going to be the last slot, the last question that we have, but we're probably going to have other questions that we go through.
Yes.
We still got 20 minutes.
Yeah.
Right.
So this right here is, in my opinion, a very sticky subject when it comes to lenders and agents.
Yes.
Because look, this has happened to me, man. I sat in a meeting. I introduced this brand new, fresh, first-time home buyer to a new lender that I was giving him a shot. He reached out to us. He said, hey, if you ever look at it, I said, sure, why not? Let's try it out. So we went to the conversation, and long story short, as we're going through it, he decides to mention seller concessions. Now, these folks were looking in a hot market. So I'm curious. I mean, look, whether you agree, whether you don't agree, it's a funny thing, because I actually looked at him as he was explaining seller's concession, and I'm like, that's kind of my job. I don't want you talking about seller's concession. I don't even want it to be an option. And there's reasons for that. You know what I mean? But what are your thoughts on it? What are your thoughts on seller's concession, especially in a hot market?
Yeah, I mean, I have my, my post to the market, so, it's a necessary evil at times, when people have to, I look at their budget first. I actually don't mention anything about seller's concessions or any seller credit or anything until I see how much money they have, and then I also ask them, hey, listen, do you have access to a gift? Who in the family can give you money? Because the seller's concession should always be the end result. I mean, or the last result. Because there's just, like you said, we're trying to get these people. It's not, and I know you're not saying that because you don't want them to come less out of pocket. You're saying this because you don't want them to have to look forever. And you want to be able to get them in the home and secure the property. And reality is that in this market, think about it. If we have buyers, sellers listening, if you have 7 people making an offer and you're expecting that seller to accept your offer and you're asking for 20 grand back, think about the probability of that. Just think about it yourself. And that's what I always tell, put yourself in that person's shoes. But don't get me wrong, there's people that have no other choice. So like I have a veteran right now that I'm working on. And he had like 15,000, and it's 0% down VA loan. But as we know, we're in New York, so I mean, closing costs are not just 50,000. You're buying a $600,000 home, in Long Island, so it's probably going to be 20 something. So we asked for a 10 grand seller's concession. They granted it. But it's the art of making the offer too. I mean, we wrote an offer. The guy's a retired, like Korean War veteran and all this other stuff. Like, great in the community.
There was a story behind it.
He's a local custodian to the, in the school district.
Oh, wow.
All this stuff. So yeah. I mean, I think that they're good for those. But I like you said, if that person had the money in the bank, that's an absolute like craziness that a mortgage banker would mention it, because it shouldn't be even a conversation.
It was just like casual throwing it out there, but he knew, because we had the conversation afterwards. I'm not like, the buyers left and I'm like, hold on a second, we got to talk, man. We got to talk, because he's like, and he knew, he's like, yeah, man, I'm sorry. Like I just threw it out there, and I was just like, yeah, like I get it. I'm not saying it doesn't work. You know what I'm saying? I'm not saying that, hey, maybe if the person needed it 100%,
right.
You know what I mean? But when we're dealing in areas or in a market where it's now like it's on fire, and to present an offer with the seller's concession, you know what I mean? It's like, we really got to be super duper enticing. But even at that point, it's probably not even going to get accepted, and I feel like giving someone the false hope to believe that it's gonna go down. I would want there to be more more realistic I guess, ideas that we give
Yeah.
to them, which is like, yeah, that could probably work in Suffolk County, for example. Maybe somewhere
I guess we, even as agent, we need to get educated more and have to check those loan offices as well, and just associate with people that have proven track record, that are professional, and not just do things for their own interests. Same as us. Yes, sure, we're making great money selling real estate, but it's not about us. It has to be. We have to come from a place of service first.
Yeah, and I would say, when it comes to the concessions, like I always tell my buyers, and for those that have no other choice, they say, listen, I don't have any family, I don't have anybody to give me a gift. I'm big with just being straightforward and telling them, giving them the reality of the market. But listen, we work with everybody, so at the end of the day, I'm a very big believer in just, giving positive energy and saying, listen, when it's meant to be, it's meant to be. Understand that you're going to lose a lot of bids.
But that's being realistic.
Yeah. Like, understand you're going to lose a lot of bids, and understand that you can't be being picky. You might have to make the offers above. And at the end of the day, in this market, like, it doesn't matter. So some people that are listening think, oh, well, if I have an FHA buyer, can they bid 30 above asking, 40 above asking? Yes, they can, if the house appraises. And in this market, it still can. So it's not like you can't make those offers with FHA buyers above asking. You can, as long as they qualify, they can. Flip side, that property needs to appraise. So, but a lot of times, even contractually in New York, most attorneys are not really even, most people aren't putting in the contracts that whatever they bid is what they have to pay, because we still are in a market where we have a lot of educated consumers, and the attorneys wouldn't let them pay $50,000 more than what the property is going to appraise for. Usually there's negotiation that happens, and then sometimes there is some cash considerations above the offer, but I would say probably 8 out of 10 times that price is reduced to the appraisal, or sometimes you might rebut the appraisal, but the price does come down if it really does.
Oh, wow. Okay. Yeah, thank you so much. Really, thank you for clarifying everything. I guess we have,
we actually touched on this. My bad, Joe. Go ahead, man. I know you were saying something before, and we got to let it out. Let it out.
No. So honestly, what I was going to say about seller's concession, I agree with everything what Rodolpho's saying, and hot market. So even as agents, I actually ask my lenders, these folks may be really low. They may not get it approved with this hot market, with all these deals that I'm going to have to go through. Is there a seller concession option that we can go with? I only ask that question because I'm not going to always look at that one property that's actually everybody else is looking for. I'm actually going to look for properties that are outside of that. So if this gives me an extra tool, if this gives me an extra option, so when I speak to that seller, hey, listen, seller, here's whatever the price you're looking for, but we are going to need an extra, I guess we said 20,000 in this case, then yes, that gives me that extra seller's concession on that, pretty much situation. So customizing the not only what everybody else is looking for, because if you look at it this way, it's like everybody wants the iPhone, but what if we can just find another style of iPhone somewhere else, right? You definitely want to be able to pay, a little bit more and have that little extra on the side just in case, so that little extra option as well, just in case. So, I'm not completely opposed to seller's concession in the hot market, but it does give me that extra tool. And I always ask when it's when it's a buyer or borrower who's kind of low, who's going to lose a lot of battles, if you look at it that way, if seller's concession is enough. So I completely understand that.
It still happens in this market. It might not be as prevalent, but like I said, we just got one of my clients got an offer accepted with with $10,000. I think the ones that have astronomical concessions are not being realistic, especially. But then again, like you said, sometimes it's not the popular house in the market. Maybe look at the houses that have been on the market for 60, 90 days already.
Correct.
That aren't a brand new house in the market. No, you're not getting a concession. It's not going to happen.
Right.
Maybe the house might need some work too. You just have to be a little more open-minded.
Exactly. Right. Stop being so picky, buyers. No.
All right, guys. We approaching.
Real
yes,
quick,
go ahead.
we kind of touched on this already. You mentioned DUs. I don't think we really mentioned LPs.
Yeah.
But if you could just kind of
I can go through it
sum it up for us.
quick. Yeah.
Rodolpho.
I mean, so desktop underwriter, and LP. I forgot the acronym what LP actually stands for, but DU is loan prospector. Yeah, exactly. So DU is actually the automated underwriting system for Fannie Mae. A loan prospector is the same search engine or organization for Freddie Mac. So essentially, just two different heads. So ultimately they're important, but I did say this in the alliance training. They're important as long as you know your information as an agent. So if you're just getting it and saying, "Oh, can I get a DU approval?" It's almost like as pointless as the phone call that you get from a listing agent asking you, "Oh, are these buyers good?" Like, no, I'm gonna say, "Yeah, no, my buyers are terrible, and they don't have a." Like it's like it's a pointless phone call. It's a pointless phone call because honestly, agents call me and actually, "Oh, are these buyers good?" Like, I don't even know why you're calling me for that. You should be asking me more in-depth conversation. Hey, listen, I looked at your DU approval. I calculated the income. It seems a little bit off. What's this? If you know how to calculate the beginning number, then maybe you can have those informed talk. Don't get me wrong. If you get a pre-approval with the DU, it is better than just getting a regular pre-approval. I wouldn't say it doesn't mean nothing.
Does a DU approval look much different than a regular approval?
Yes, it does look much different. But
does it come on a yellow paper?
It's just paper. I mean, like, it has more information. It says a little bit more about the client. But at the end of the day, understand that it's still data entry. It's what we put in the system. Don't get me wrong. We can't change their credit score, but we can manipulate their income. So don't get me wrong. If I know I have a very tight buyer, and some people say this might be giving too much information, but to me, if you have a very tight situation, the more information, the better. I've seen some offers that come from some agents I deal with that send everything. That send, they block out social security numbers and stuff, but they send the W-2, they send a DU approval, they send the pre-approval, and hey, here's the whole package. It's a guaranteed deal. That sometimes maybe it's overkill, but at least you know that the DU doesn't say a fake income that isn't backed up. Because I've seen some loan officers try to send a DU. Meanwhile, they know that like one of the borrowers has a credit issue and they didn't put them on the DU, and they're just waiting for them to go through credit repair, and they're trying to get the offer accepted. They didn't tell you that they're doing credit repair for the co-borrower, and they just lied about borrower's one's income. So like, there's many different ways to finagle it. But listen, the more information you have, if you get a DU approval, I would still say, listen, get it. If they're going Freddie Mac, get the LP. But please know your numbers. And even if I'm a resource here for the Alliance movement no matter what. So even if I'm not doing the loan and you say, listen, I got to do your approval from this lender. Hey, listen, can you spend 5 minutes with me? And I can dissect it for you and say, listen, yeah, this is bullshit.
And do you yourself issue DUs automatically or just at the request of the agent?
Well, I'm sorry, I didn't hear that.
Do you automatically issue DU pre-approvals, or you just do it at the request of the agent that works?
I do it at the request that if they ask for, because at the end of the day, in this market, people are putting so many different offers. So for me to run DU 35 times with 35 different loan amounts is a little bit much. So ultimately it's a separate run that we have to do. But and we usually would keep it higher because we're not going to continue to run every different loan amount. Because actually it runs a red flag if you do that too as well.
So with the short period of time that we have left, I know you do a lot of VA loans. Give us the pros and cons. I mean, let's end it with the with a loan that I really don't see. I mean, I haven't done it myself. I'm looking forward to doing it at least one day. What's the pros and cons behind that? Let's talk about that real quick.
Yeah, I mean, VA loans, I know I told you guys a few times about it. It's near and dear to my heart. My brother's a 20-year Marine Corps veteran, actually is with the EXP team as well.
Nice.
So we focus on giving them the VA benefit. The pros is obviously the 100% down. There's a funding fee for those that are using the VA loan for the first time. But if you have over 10% service-related disability, you pay zero to the government. The fee is actually a big fee that you're saving because it's 3% or 2 point something percent. So that's something that's huge for the veteran. And I'm big with letting people know, hey, listen, we just celebrated the start of summer, Memorial Day. We all send out memes. We all send out things when it comes to Veterans Day, Memorial Day. But then flip side, when we see 100% financing, we tell them, oh, we don't feel comfortable. Understand that these veterans earned the right to put no money down.
Right.
The money's still the same. Appraisal process, I would say, if anything, the only con is that sometimes it takes an extra week to get the appraisal. The appraisal guidelines are the same as FHA, so you can't have peeling paint, you can't have exposed wires, and you have to have handrails. If that really, drives you crazy, I would say that, maybe reevaluate yourself.
I accepted an offer on a VA loan after meeting the buyer several times for a luxury condo, a 1 bedroom, over $500,000. And, it's like, I know it was 0% down, but, obviously this lady was doing great service to our country. She was a veteran. She was also 20 years in the armed forces, and she still had great income. And I think, to me, she was a great candidate for that.
Yeah.
And introducing her to my sellers, and they just went, they're like, okay.
Yeah, as long as the numbers, listen, just like every other deal, if the numbers work, the numbers work.
Yeah.
If they don't, hey, listen, that veteran can't buy the house either. It's not any different. At the end of the day, it's just a phenomenal product that they earned, just like the DI bill. I would say, and on top of that, everybody out there, this is a niche market. So if you learn about this, you can actually gain more business than losing it if you actually learn more. Because there's relocation specialist certifications through MLS. There's a lot of different things that you could do to actually serve, a veteran instead of deterring them from putting the low down payment. And like I said, if a lot of times they do have money on the side too. So, having that question, same thing. If there's appraisal issue, 10 grand above asking, some people are still willing to do that stuff. They just don't want to pay mortgage insurance. So if they go FHA and put 3.5% down or put 5% down going conventional, they have to pay mortgage insurance. So just so you know, it's 100% financing with no mortgage insurance.
Wow.
And rates are really good. FICOs, you can go down all the way down to 580, sometimes even 550. So it's an aggressive, and there's no loan limit. So they can actually buy a $2 million house with a VA loan.
Wow. All right.
As long as they qualify.
Thank you so much. I mean, there was a lot of information for everyone, guys. But keep watching these videos. Please keep on populating the comment sections if you have more questions. And I don't know, you guys. We can also contact Rodolpho. I'm going to put his information on our Alliance Movement comments, because this is also published in my public Facebook page. So I will only put the information on the Alliance Movement comments. All right, if that's okay with you.
And my Instagram is right there in case anybody wants to. I'm gonna start doing a lot of videos, educational videos.
Yes.
On Instagram. So at R Miller Loans. You can check that out. Give me a follow, and you can start following some topics.
All right.
Awesome.
All right. Thank you so much.
Looking forward to it.
Yeah.
All right.
Yeah.
Take care, guys. It's been great.
All right. Thank you, everybody.
Appreciate it.
Great.
We're gonna queue it up as we always do. We have to get our outro out because it is Friday.
Yeah.
We gotta dance now.
And now we have to dance. Dance time.
Yeah.
Hey, come on. Sprinkler. Awesome. Awesome. So, guys, enjoy your Friday. Once again, thank you so much for tuning in. Rodolfo, thank you so much for being our guest today. Israel, it's always good seeing you. Gigi, it's always good seeing you.
Thank you.
Enjoy your weekend.
Yes.
Get more deals.
All right.